It's time to retire, and you've decided to move to a state with no state income tax to save money on taxes. But are you really saving money? Hi, I'm Dave Lopez.
And I'm Chase Lopez, and we're financial advisors with ILG Financial. And this is another episode of Retire Your Way with ILG Financial, where we talk all things retirement planning. Now, Dave, before we jump in, just want to remind everyone, make sure you hit that like and subscribe button down below. Also, click on that bell so you can get notifications for any future videos that we put out. So let's jump right into it, right? It's a common misconception, or maybe misconception is too strong of a word, but oftentimes folks will say, hey, this state doesn't charge state income taxes. I should move there in retirement to reduce my costs.
Yeah, save money.
Save money. Yeah, absolutely. Absolutely. So there are 9 states that have no income tax, but that doesn't necessarily guarantee affordability. So the states are Alaska, Florida, Nevada, New Hampshire, South Dakota, Tennessee, Texas, Washington, and Wyoming.
Yeah, so the idea would be if I move from Virginia, for example, we're in Virginia, to one of those states, to Florida, or what did you say, Wyoming, I automatically save 5.75. That's Virginia state tax. So how can I go wrong?
Right.
Well, here's how you can go wrong. We're not in a vacuum, right? There's other costs that affect your cost of living. So when we talk today about cost of living, we're talking about your total cost to cover your bills. And paying state income tax is one piece. What are the other pieces? Well, you're going to have to pay, just on the tax side, you're going to have to pay property tax on the, if you buy a property there, right? You're going to have to pay sales tax, often on some or sometimes all of the things you buy in your day-to-day life. You're going to have to pay excise tax. And those are just the taxes. Other things that we'll talk about, like insurance, may be higher. Okay. So why don't we just kind of jump in? But I will tell you the theme for today, what I want you to think about as you're listening to this is the data is pretty strong that there is no direct correlation or connection to no state tax does not mean your cost of living to live is going to necessarily be cheaper. And here's the examples.
Yeah, so let's jump right in. So the first one is home insurance costs. So if you own a home, you have to have home insurance, right? And in Florida, they actually have the highest home insurance costs in the entire United States, approximately $10,675 per year. Texas is the 4th highest, $4,789 per year. The national average is $2,584 per year.
Yeah, I'm glad you mentioned that because you specifically did. Those are the two, if you remember earlier, there were 2 on the list that you pay no state tax. Right. Where Florida, if you're paying $10,000, almost $11,000 for your homeowner's insurance, as opposed to the state you're in, but you might be paying $2,000. Remember, $2,500 is the average. You might be paying $2,000. You're paying almost an extra $8,000 or $9,000 a year just in homeowners. That might be more than the state tax you're paying in Virginia. So be aware of that one.
Yep.
The next one, it's very similar. Auto insurance is different by state. Now, a lot of people don't know that auto insurance in the United States is regulated at a statewide level. So it's all over the map based on the state. So Nevada, which was on the list, Florida, they're both in the top 10 for cost for auto insurance. Nevada, 6th highest at $3,200 a year, an average. Florida, 8th highest at about $2,600 a year. The national average is like $2,300. And in some states, it's much, much lower than $2,300. So that can affect or eat into your savings of no state income tax.
And you can see how these things can start to kind of stack on top of each other.
Yeah, right.
Another one is property taxes. And this is a biggie, I would say.
Yeah, this is a biggie.
Property taxes in rural counties across America could be as low as less than $300 per year. In some suburban counties in the U.S., it could be as high as $10,000 a year. So huge difference between those two. The highest rates are in Illinois. It's 1.83%. New Jersey, another high one, 1.77%. Here are 2 no state income tax states that have high property taxes. New Hampshire, 1.41%, and Texas, 1.36%. So these are taxes that you have to pay every single year, right? So you want to make sure you, again, do that calculation because that's eating into those state tax savings that you're thinking.
As an aside, I will say Illinois and New Jersey that you mentioned do have state tax,
Right.
and they have the highest
Right.
property tax. So that works the same way. That
Right.
might be a reason that you do move,
Right.
because not only am I paying a high property tax,
Right. Right.
and I'm also paying a high or a considerable state income tax. So
Yep.
everybody needs to look at this, not just the people who are looking for a 0% tax. You might be better off moving to just a lower
Right.
state with a lower state tax.
Yep.
All right. Next one is what we call sales tax. So sales tax, as most people are familiar with, when you go to the store and buy something, the sales tax is
See it right on the receipt.
the restaurant, or
Yeah.
you go to Target, and states charge. That goes right to the state. And some states it's higher than others. Some states it's lower. Some states exempt some things like groceries from it. And
Right.
you just need to be aware when you move to a new state how that will affect your cost of living based on your spending habits. So Tennessee, Nevada, Texas, Washington, they were all on the list, right?
Mhm.
They're all no income state taxes. So you may spend more money in extra sales tax in that state just doing your day-to-day living than you would have paid in a state with lower sales tax
Right.
and a state income tax.
Right. So that's the sales tax, right? And then there are also just other living expenses, right? So you have things like utility bills. New Hampshire, another one of those no state tax states, has the highest average utility bill at $4,500 per year. Wyoming has some high energy costs. So energy cost is something you want to consider as well. And then there are things like capital gains tax, dividends, and your Social Security may be taxed in certain states and it may not be taxed in other states as well. So big picture, right? As we kind of put a bow on everything here, Dave, I think the big takeaway is state income tax is just one piece of the overall puzzle of how much your cost of living is going to be. As you're looking at these different states where you want to live, there are a ton of different financial factors. There are also a ton of personal factors, right? I don't want to move far from the grandkids or something like that. So you want to make sure you take all of these factors into consideration. You're not just honing in on that state income tax.
Yeah. And where to start? I would say rewatch this video and just make the list of the things that we had listed.
Yep.
And I would start when you're looking in another state, just get the data on all those points. Average auto insurance, average property tax rate, sales tax rate, everything that we listed on the list. And then you can start to compare it to where you are now and ask your financial professional or your accountant to help you turn that into real dollars based on your budget so you can get a good estimate.
Yeah. Another episode of Retire Your Way with ILG Financial. Thanks for joining us. Again, don't forget to hit that like and subscribe button down below.
Hi, Dave Lopez here. I want to thank you for watching our ILG Financial video series, Retire Your Way with ILG Financial. Just wanted to remind you, in addition to our YouTube video series, we also offer podcasts, 30-minute podcasts on different topics. You can check them out through our YouTube channel. You can also look at them through our website or any of the below listed platforms. Talk to you soon.